Muthoot Capital came out with its earnings results yesterday. The two things that came out good was that the disbursement has been started from this quarter, and they have been continuing to strengthen their balance sheet with COVID-related provision of around 3.7% of its AUM. So without wasting any further time, I will ask Vinod sir to take us through the financial, and then to Madhu sir to give us a brief outlook of what he sees ahead and what has been done. So over to you, Vinod sir.
Thanks, Bhavik. Good morning, everybody. Nice to be talking to all of you once again. Yesterday, we had our board where we actually approved our financials for the second quarter of the current financial year, and this time, while it was delayed for various reasons because of our own delays in wanting to get things right before we actually present it to the board and present it to the investors, we were about 15 days later than the normal. Sorry for that, but maybe this is a quarter where we, after a long time, started disbursing, and we started in the current quarter. We did a total disbursement of about 116 crores. We did some disbursements last quarter of about 17 crores across the full quarter, but that was things which were sourced much earlier. This was in comparison to about 488 crores that we did in the same quarter last year. This took us to a total AUM of about 2235 on the books, and outside the books, all put together about 2269 crores versus about roughly about 2,550 odd crores that we were at the end of last quarter, and about 2,700 odd crores that we were about a year back at the end of the same quarter last year. Based on this, the income which was generated was at about 144 crores versus about 131 crores in the immediately preceding quarter, and about 145 crores in the same quarter last year. In case of this income, this was maybe higher than the same quarter in the immediately preceding quarter, because we had changed our method of accounting. We actually last quarter we had accounted basis the repayment schedules which we have, which is on a reducing balance method, but the RBI mandates that the income has to be recognized basis the pause outstanding, and therefore that is what was done in the current quarter. If last quarter also we had followed the same method, the income would have been reasonably flat. On the finance expenses, the cost came down by about 9%. That was more because of it was a combination of two factors. One is about 180 crores of utilization went down because the book has gone down, as you can see. And second is the interest going down. So maybe a 5 crore reduction would be a combination of about 4 crores on account of utilization reduction, 1 crore on account of interest rate reduction. This is one line item where we see the cost coming down as we get into the third and the fourth quarter. This is the benefits that we have seen in the month of September, and which has not been, I would say, the entire benefit of that has not been captured in the current quarter. Now, this led to a net interest income of about 96 crores versus about 78 crores that we did in the immediately preceding quarter, and about 87 crores that we did in the same quarter last year. Operating expenses at about 36 crores was slightly higher than the immediately preceding quarter, more to do with in the last quarter a lot of collection, or majority of the collections used to happen either through match, or it used to happen through our own employees who were, even the sales guys, who were actually not operating at the counters of the dealers, but they were following up for dues from the customers. So that did not have a cost. When we started dealing with the agencies, the cost has started moving up, which is seen in the 36 crore figure. Also, the disbursement having been started, there will be some bit of hit on account of the dealer incentive and other sourcing costs. Loan loss provision was at about 38.5 crores versus about 33.5 crores in the immediately preceding quarter and close to 15.5 crores in the same quarter last year. We have continued to be conservative, and like Bhavik said at the beginning, we look at this as an opportunity to continue to strengthen our balance sheet, which we believe will give a lot of comfort to the investors, rather than showing a huge bottom line at the end of each quarter and then take a hit much later when things actually DPD starts moving. We have made a provision. In fact, Bhavik mentioned about 3.7% on the overall books, because securitized portfolio is strictly speaking not a part of our liability on a 100% basis. We look at it as it being at a total book minus the PTC transaction, also securitized portfolio. And therefore, we believe that the provisioning that we have done is about 4.9% of the total book, our own book. And this has led to the profit in the current quarter being at 21.3 crores before tax and 15.7 crores after tax. On a half-year basis, our disbursement was at about 133 crores versus about 975 crores, which was down 86% for reasons known to all of you. The book did go down by about 16% at about 2235, and income at about 274 crores was 5% lower than the immediately in the same half year last year. Interest cost has gone down by about 12% or about nearly 14 crores, which will continue as we go forward in the third and the fourth quarter, leading to a more or less flat net interest income of about 175 crores this year, as well as this 6 months and 6 months in the last year also. Operating expenses are lower mainly because of first quarter being, like I said, a lot of collection costs being through not having been incurred, and that has led to some bit of reduction. Also, the business not being there effectively meant that there was no sourcing cost, which is seen in the lower cost of the operation. The loan loss provision has actually doubled. It has gone from 32 crores or more than doubled actually, 32 crores to about 72 crores. And the overall provisioning is at about 72 crores in the current year, which is effectively 8.8% of our total book, of our own book. The total provision that we have, about 196 crores that we have on our book, is about 8.8% of our total own book. And the profit for the first half was at about 29 crores versus about 27.6 crores last year. Here, one of the major reasons for difference is last year when we moved to a 25% tax regime and a 22% tax regime, there was some bit of write-offs which happened of the deferred tax. That is the reason the profit last year was lower. If that had not been there, we would have been at about 36 odd crores last year. But then what we ended up reporting was about 27-28 crores. The OPEX to NIM was in the current quarter was at about 38% versus 56% in the same quarter last year. Return on average AUM is at about 2.7%, and earning per share for the first half is at about 17 rupees, 17.4. I now actually ask Madhu to talk about the operations, and then we can attend to your queries.
So good noon once again. I think short and sweet is that the industry has picked up well as far as October is concerned. In fact, September itself, we were across the country almost at 70-75% of our locations. Industry has also bounced back in a big way that we have seen in the month of October with the festive season. East market has also picked up very well on the expected lines. In fact, we have not only activated all our centers, but we have activated all our products. Besides two-wheeler, we are into used cars. So all 20 centers we are active. we had started a relationship with Hero two-wheeler electric. We had a tie-up during the last Auto Expo. So we have started working on that as well. So we are active across as of now. In fact, there was a lot of activities along with the OEMs. A lot of action happened on marketing and digital campaigns as we restarted our business in the month of September and in the month of October. And as we go forward, from marketing perspective, there would be a lot of aggression in the market. We had looked at very specific schemes for specific segment of customers, which has also helped us go back to our core markets and start doing business there. In fact, from the perspective of COVID, from the perspective of the things that is happening at the ground, we are very aware about those facts, and still we feel that as we go forward, we do not see much of challenge as far as operations are concerned, whether it is business or whether it is collections. From collection perspective, we were active across the country without much of difficulty. We were able to reach to customers. But if the local transport starts, I think it would further improve the way we are working. Financials are there in front of you, and we'll open this forum for Q&A, and we'll like to go into specifics once the question comes. Over to you, Bhavik.
Thank you very much. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Harsha from Edelweiss. Please go ahead.
Yeah, thank you. Hi, sir. I hope everything is good at your end.
Yes, very much, Harsha. Thank you.
Great, sir. Sir, so for the first question was in line with your opening commentary. Sir, you said that overall macro market is looking good. So we have also seen two-wheeler companies giving out some, all of the numbers that they have reported are much higher than what the street was expecting. So how will that percolate into our numbers going forward in Q3?
For the month of October, we were around 15,000 units. Okay, similar to what we were in the month of in the Q2 actually. Okay, the industry, how it has moved is in the month of August itself, actually it has overtaken the numbers of previous year. Previous year, let's say August was about 15 lakhs. This year, 15 lakh vehicle got sold. September was around 17 lakhs last year. This year it was about 18 lakhs, and last year it was 18 lakhs in the month of October, and we are seeing about 20 lakh sales. So we are, from market perspective, we have confidence that Q3 should be a normal quarter. We have always aspired for a market share where we say that from the financing we'll do around 4.5 to 4.75% market share. We have always aspired. As of now, we are at about 15,000, and I mentioned in my earlier comment that we are active around 75% of our locations, and close to 60% of our branches are active right now who have started sourcing the business. As we go forward, the long-term number that we foresee is about, let's say, 17 to 18,000 during the festive season, and we should be able to continue this run rate. So from industry perspective and from a market share perspective, I think around Q4, what I said, market share of about 4.5 to 4.75% of our financed vehicles in the country, we will be able to achieve those numbers. I'm not quoting specific numbers because around December is where we would be able to estimate how the Q4 is going to be, how COVID has actually worked out during the Q3. There are a lot of other variables that we need to assess next couple of months. So I can give you a broader view that this is the market share and this is how industry is going to be.
Sir, have you also seen a large influx of financing happening in two-wheeler because of some very high amount of deals that have been pushed by many large NBFCs and even banks? So financing as a percentage of total market, has it gone up in the past few months?
I think financing has actually got shrunk by at least 2% to 3%. That is the initial feedback we are having. And I'm ready to believe those figures because of the logistics reason. A lot of NBFCs and banks still follow traditional model whereby they operate through branches and things like that. So there are logistical issues still at the ground. So we were expecting it to be about 37-38%, which is about 35% is our internal estimates.
Okay. And sir, just one last question. In your presentation, you have mentioned that you have also created provisioning for one corporate account where there was fraud detected. So can you quantify, is it a big account that can impact us?
The total amount was 4.5 crores. We have provided 100% on that.
And means any chance of recovering that account going forward? The procedures will be on, right?
It's a combination of about 36 lenders plus 2 or 3 sub-debt lenders plus 1 ECB. All of them are following up. So I'm saying that no, obviously the intention is to recover everything, but
right.
It was prudent on our part we thought it was prudent on our part to make provision, which we did. It's too early. It's less than 20 days that since this has come to light. It has come in the current quarter, but we thought it prudent to provide it in the last quarter because we are aware of.
Okay, sir. And sir, just one last question, sir, on asset quality. So, sir, even we have seen many of the geographies that we have expanded has given us a very good growth, but that has also come at the cost of high delinquencies, for example, even in the western region. So, sir, assuming things normalize in Q3 and Q4, what kind of improvement are we looking into our asset quality specifically in those specific regions, non-south regions, basically?
So in the west, in fact, I have mentioned earlier as well that we had some legacy issues and we had slowed down. Then we had put a new team in place. Unfortunately, after the lockdown and even now, we have not been able to restart business the way we wanted to restart there. There are a lot of issues there, especially in Maharashtra. We find that still there are areas where logistically it's difficult to do the collections and things like that. It would take some more time. Even Mumbai, we are not able to move around because of lack of local transport. I think once the logistics improves, then the business in West would start inching up. From the portfolio perspective, we are not much worried because we would be able to roll it back once things are normal. I think from quality perspective, across the country there are going to be challenges, but the key thing is whether we are present everywhere with our team for collections, and that's what I mentioned, that entire collection team is activated now, and from 1st of September they had been there in the field. Collection numbers are improving in the sense that from the efficiency perspective, we had been maintaining 95% plus minus despite all the logistics issues. So as of now, we are not much worried about whether West is what percentage or South is what percentage. It is about ensuring that your entire infrastructure is there to collect the money, and as things ease out, and when I say ease out, I am specifically talking about logistics. When I am talking about collections, as logistics, I think things would start looking better. In fact, it would improve the customer's cash flow as well. A lot of customers are displaced So they are available. They want to come back and they'll pay. So a lot of ground realities are there which we need to consider, and we need to cooperate with the customer during such difficult times. And I think next 2 to 3 months able to address from overall perspective, overall quality perspective. And specific to West, I told you that there are still transport related issues which I think improves as we go forward.
Okay, sir. Thank you, sir. Thank you. That's it from my side, sir. Thank you very much for the detailed presentation. I mean, it is by far one of the best presentations that I have seen recently.
Thanks, Harsha.
Thank you.
Thank you.
Before we take the next question, I'd like to remind participants, if you have a question, please press star then 1 on your touchtone telephone. The next question is from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Thank you for taking my questions. So if we look at Q2 of FY20, which was also not a very good time to do this business, you were taking around 2% sort of provisions on S1 and S2. And now, of course, that has gone up because of the COVID-related provision. So if I look at your slide on, where you have given the bifurcation of S1, S2 and everything, basically you have around 350 crore sort of a problem right now, which is including S3 and other loans which are standard assets. Right. So against that 350 crores, we roughly have around maybe 200 odd crore. But we also need to provide more for S1 and S2 given the situation. So what are these numbers as on October, and what would be the right sort of provision number on S1 and S2 given your understanding of the market? So I'm trying to get to the whole in the balance sheet X of the provisions that you have already made, and I want to know the provision number which is appropriate for your standard assets given the situation right now.
Sarvesh, good afternoon. Vinod here. See, I would be very happy if you try and show me the 350 crore figure where it has come from, and maybe I would want to possibly do a call with you separately and take you through our basis and understand your basis, because we believe that we have always been prudent and we have always been conservative in terms of provisioning, and whatever provisioning we have done, it is by and far, I would say, covering a large percentage of what is I would say likely, what is the likely impact. And when we talk about a provision figure, that is basis 2-3 factors, because obviously what do? There is a ECL method that you work out, which is basis certain past history, you create the provisioning. Apart from that, you work out saying that no, if things start moving and the DPD unfortunately has frozen, and therefore we don't know what is the mindset of the customer, and basis that you can't possibly make a provision. So we try and do what is the best estimate. Our belief is the number 196 crores total that we have provided for, including the standard and including the S3, is a reasonable provision for the kind of situation that we are in. It's roughly about 8.8% of our total book, which we believe is more than adequate to ward off any worries for future. So, maybe separately, maybe offline, I can take it with you and convince you that what we are putting up is appropriate, and I would not agree with your statement that there is a hole in the balance sheet.
Okay, sorry. So can you just give me the number for October ending for the same? So S3 NPA.
Too early, Sarvesh. Actually, you will appreciate the fact that October ended on Saturday and Sunday, first to fifth, we will expect, because of the board, we were more tied up with that. So October numbers would not be available to share as so early.
Okay, sir. I will take it. Maybe I will have a call separately to understand this a bit better.
We are available on call.
Sure, sir. I will do that. Second question is, on the other group companies business, if you can shed some light, during this pandemic, I believe that most of it is gold loan should do well. But on your group companies at the promoter level, how are they kind of coping with the COVID scenario?
We normally don't discuss the other group companies on this call because this is a specific company which is a separate legal entity and it has its own. The only common thing is definitely the promoters are the same, number one, and but here there are a lot of other investors also. 37% is held by other entities, and individuals. So we normally don't discuss the other group companies, but your knowledge is as good as ours because obviously we are far more tuned to the current company. We know that gold company will do well, which is possibly the largest and the flagship company of the group. There is an MFI, there is a housing finance company. So whatever happens to the others in the sector, that will be happening to this.
Sure. And finally, sir, on the Kerala thing, I think Kerala has been sort of a laggard in terms of the COVID sort of scenario itself in India. The numbers, I think, now after Maharashtra, probably they are number 2 in active cases and all that. So given that, are you seeing somewhat of a subdued performance from a market share perspective with respect to other companies? Because your home market is sort of more affected, at least for the numbers, just the headline numbers, and if you can throw some light on the ground realities of what is happening. Because other parts of India are considerably less affected as of now, at least.
I think it is too early to do an analysis like this because every state is having their own problems. Every state has a different kind of sales trajectory. A state which has done well now, how they are going to perform next month, no one can predict. If someone is able to predict, it would be the basis or the postulates that they're using would be a big question mark. So I'm saying that it is too early to really tell which state is going to bounce back, how the stability in the state.
But till now, let's say in the last 3-4 months, are trends in Kerala different from the overall market is my question in terms of both collection and disbursements and new vehicle sales and all that.
So from sales perspective, industry perspective, when the moratorium ended, at that time the Onam festival got over in Kerala. Okay, the benefit that other states would get is when the moratorium has ended and almost 1 month is over, the festive season is starting, so you'll see a better sales in other states. But is it linked to COVID? Across the country, linkage to COVID is similar. There is no difference. But only the festive factors is something which is propelling certain states, and otherwise, I don't think so. There is any other factor that a sale is increasing in some states. So because COVID is low or social distancing norm is not there or things like it is not like that. For example, East has done very well in the month of October. So, and it is no different from any other state. Similarly, this time North would do well in the month of November because of Diwali. I told about West. We have kind of kept slow there because of various logistics reasons. So every state has their own problem. COVID is the base scenario where it has actually pulled down the entire industry. But definitely what we are seeing as a plus is about pent-up demand that was there. Second, with the economy slightly improving, people have some cash flows, basis which and lack of public transport, they need a two-wheeler. And third and very most important, in the month of October and November, we should link it more to festive season than anything else. We'll have to wait till December to really see how COVID plus economy is propelling the sales.
Also, Sarvesh, one more thing which you need to know, since you have seen the which we would want to point out is, if you see, we would want to point out that the Q2, when we actually started disbursement versus the same Q2 of last year, the south volumes was at about 75% versus 70% of last year, which effectively means that south is doing well than the other states, other parts of India, number one. Number two is, because we are much more stronger in Kerala, Kerala has not been impacted. Actually, the volumes are higher only.
Okay, sir. Understood, sir, and I'll get on a separate call to understand some of the numbers.
Thank you.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Rajiv from GC Holding. Please go ahead.
Yeah. Hi Vinod sir. Hi Madhu. Two questions. Yeah, all well. Hope all well there.
God bless.
Yes. Thank you.
Yeah. So just two questions. One is on the collection efficiency, where we have reached 95%. So just like in the non-hypo book, when do you think will we be crossing the 100% so that we are clearing we start clearing the backlog also?
This 90, in normal times, we were doing about 92 odd percent as a percentage of 92% of the year. If you look at the figures in the previous month, 37, becoming 54, becoming 71, I think you will draw your own conclusions that currently we are, if you on a cumulative basis, it could be close to 75%. So it would happen over a period of time. Maybe crossing 100 could be no doubt a tough task. But I am saying that no, at 95-97% itself, we should be crossing. We should be able to start collecting from the others also. So from the people who did not pay during the moratorium times.
Okay. And on the AUM front, so I think Madhu indicated October itself would be like a 15,000 on the volume, which would mean roughly 90-95 crores per month on the disbursement. So if you can clock say 270-300 crore of disbursements a quarter, and I think roughly that will be the amount that we will end up collecting with an improved efficiency. Is that the right way to think?
At least that much.
So from Q3, maybe there is an inflection point when your AUM reduction will stop. There is a chance that Q3 AUM reduction will not be there, maybe flat to slight positive.
Yeah.
Okay. Okay. Thanks a lot and all the best.
Thank you, Rajiv. Thank you.
Thank you. The next question is from the line of Akhilesh Kumar from AdProtech. Please go ahead.
Yes, thank you for giving me a chance. And I joined late actually. If you have already answered, maybe you can skip on that question. Simple query that for last maybe I think quarters we have been trying to explore the new markets in consumer durables during festival time. How far we have progressed? Like say, are we in a position to expand that thing to some other parts of the country?
So we have just come back on our core product. I think we'll have to stabilize our current core product and then we look at what are the new that we wanted to get into. Definitely it would happen. Maybe deferred by a quarter is something I can say right now. And once we are 100% as far as two-wheelers and used cars is concerned, I think we'll be able to take this whatever new initiatives which was held back, we would be able to start that. Project-wise, we are ready for that. Only thing is that right now we want to ensure that core products are back to normal. There's a lot of action happening on collections in the sense that to reach out to customers and a lot of other technology support is happening, because of which, we feel that during this quarter we should stabilize as far as core business is concerned, and post that all the new initiatives. So around Q4 is something which I would be able to give you some update on any of the new initiatives that we would have discussed earlier.
Okay. But the pilot project in that direction we have already done already, right? Any, like say, encouraging sign was there, or we have not started itself?
We have, as I said, every new stuff is about pilot. Pilot is something which I would not like to discuss in a call like this.
Okay.
And I said that Q4 will come back to you, because current situation is not a normal situation where I can predict and tell the trajectory. Right now it is about how core business is back to action.
Okay. And earlier, like say in the lockdown quarter, last 2 quarters, we took up some kind of a marketing for parent company Muthoot FinCorp of gold loan. Are we going to go ahead continuing that in future as well?
Cross-sell is happening. So cross-sell is an initiative whereby we keep on trying new products which is in line with our customer requirement. For example, gold loan was one of the things, because we thought during the financial distress, if we can facilitate that customer reaching the branch and they are able to conclude the deal, they'll be getting some financial help. So we started with that approach. Cross-sell as a initiative is something which we will keep on experimenting. So as far as gold loans are concerned, we'll continue with that. But as the core product goes up, earlier gold loan, whatever numbers used to happen, it may come down depending on how strong the core product is growing. So while we'll continue, but it may not be with the same intensity that it was during the Q1 and Q2.
Okay, the focus will not be there entirely, but in sidelines you will be still utilizing.
Yeah, as a cross-sell initiative, it would be there.
Okay, good.
Yeah.
And the eastern side, I think you have few branches and you were seeing good growth there, like say Jharkhand, West Bengal, Bihar. Are you still like say trying to see better sales options there, increasing the branches?
In East, we are not there in Jharkhand or Bihar. We are in West Bengal, Orissa, and a small piece of Assam. But going into other states was part of our expansion plan, which in earlier calls I've said that all expansion plan we had held back because of pandemic, which around Q4 we'll review. We have all the aspiration to get into these markets and grow our numbers there. And we feel that we have all the USP that is needed to grow in those markets. We know that market very well. We should be able to do it. So as of now, we are not there, but definitely we aspire to be there very soon.
Okay, good. Thank you. Do you, FinCorp have presence there in all the states there in the eastern side?
They are getting into it. They have got the approval from RBI. They'll also shortly get it to those areas.
Okay. We can pick it up, right?
We are already there.
Okay. Okay. Thank you. That's it from my end.
Thank you. The next question is from the line of Kislay Upadhyay from Abacus. Please go ahead.
Vinod sir, I had a question on the collection. This 95% collection, does it include areas from the previous months?
It would include areas from the previous months, but more importantly, the billing is without considering moratorium. So let us say if we are saying X number of people have opted for a moratorium, we have included their dues also as a part of billing.
Oh, okay. And there would be some customers who have not paid any installment to us since March, right?
Yeah.
What would the number be, and in terms of AUM, how much would that be?
That would be roughly about 35,000 customers, and AUM is 15,000.
10 to 15% of the overall.
So actually it's about 42,000 customers. AUM is about 192 crores.
Okay. Sir, on the interest rate, I know that our utilization of borrowings has been lower as our AUM has gone down. Have we raised any or refinanced at lower interest rate in the past 3 months?
Yeah, you will see from about 9.88 it has come to about 9.67. Lot of benefits came towards the fag end of September. So next quarter, the entire benefit is not seen in the quarter. Next quarter will be significantly lower. You will see the numbers coming down in the next couple of quarters.
Okay, and could you mention rates of few refinance deals that we have done in the last 3-4 months?
Let us say some things which we were doing at about 10, we were now possibly done at about 9.4%. That kind of thing. No, when I'm saying refinancing, I'm talking about most of the WCDLs and all, when they roll over, we do it at that rate. Now, for example, one transaction was there, which was a forex loan, which was at about, including hedging, it was at about 8.9%. I think now it has come to some 7.97%. So I'm saying that, and that's a big chunk, about 70 odd crores. So I'm saying those kind of things may not often remember each and every item, but broadly, whichever number rollover which has happened, there has been a reduction in the rate. 560 crores order got rolled over. I think we have put it somewhere in one of our slides. 560 odd crores, that's my memory.
Okay, superb. Sir, finally on the, so it seems like we are holding sufficient provisioning and hopefully we won't need as much. In what circumstances and what would be the drivers which would make us to write back? When can we expect the write back of these provisions to our books, to our P&L?
Let's both pray together that things improve on the ground here. Right back to what they
Yes, so what I actually wanted to ask is, will Q3 see a write back in case we are able to achieve good?
Definitely no. I don't see things improving in the next 2 months. Definitely. Okay. I'm saying that let's pray for Q4 or first quarter of next year.
Okay. Fair enough. Thank you, sir. That's it from my side. All the best.
Thank you.
The next question is from the line of Abhijit Bora from Sundaram Mutual Fund. Please go ahead.
Thanks for taking my question. So my first question is I wanted a clarity. On page 9, you have given the moratorium customers, right? As a percentage of total customers. In September, there was no moratorium, right? I just wanted to clarify what is this definition? Number of customers is given on slide 9.
Abhijit, Vinod here. See, moratorium is not there. I agree with you. This is the RBI circular. But there has been a freeze which has been put by the Supreme Court on the DPD movement. So while when we are talking about that, we are talking about cases where people have not paid at least one installment. I think we have put that in the slide very clearly that even if the customer has not paid for 1 month, we are calling it as moratorium. And maybe the response which I gave to our friend Kisle just before your query, I think that answers it. We said that some 42,000 people have not paid a single installment, which is not having paid the 7th installment. So effectively, the people who additionally opted for moratorium in the month of September would be about 42,000 people out of the 6.5 lakh customer base that we have.
Okay, and this corresponds to 192 crores, right? That's what you mentioned, of AUM which has not paid a single installment.
AUM is 192 crores.
Right, okay, sure. So that was my question. I'll get back into it.
Thanks, Abhijit.
Thank you. The next question is from the line of Ashish Sood from Muthoot Capital. Please go ahead.
Yeah, hello sir. Thanks for the opportunity. So I have 2-3 questions. So first one is, while doing the provisioning, what is the LGD number that you have assumed in the model? Can you share the same?
Loss 24, what is the percentage? 1 second, Ashish.
Yeah, sure.
Loss 24, what is the
There's a slide.
It's about 52%, right? Roughly about 51-52%, Ashish.
Okay, thanks. And so my second question is, can you share the stage 2 loans number as on 30 September?
Sorry, I didn't get your question.
Can you share the number of loans which are stage 2 as a percentage of total loan book as on 30 September 2020?
Ashish, I think we can maybe get connected offline, and then I can share whatever else you want. Maybe as of now, I may not be able to share. What you're effectively asking for is the breakup between stage 1 and stage 2.
Yeah, correct. Yeah.
So I would need some time to actually take it out and give it to you, but maybe we can connect offline.
Okay, sure. Thanks. These are my questions.
Thanks, Ashish.
Thank you. The next question is from the line of Ratish Warrior from Sundaram Mutual Fund. Please go ahead.
Hi. Thanks for the opportunity. I had one question. I joined in late. Sorry if you have answered that. You can ignore. I'll take it offline. If you can just throw, how many of our customers would have paid during moratorium, etc. How many of our customers now would have paid their installments at different stages? If you can just run through that, that will be helpful.
There is a slide on that. You have Ashish, I think it is there in one of Ratish, it is there in one of the slides where we have said what is number of people who paid on each month basis. From April it was 215,000. In September it was 453,000. So that one. It is slide number 7. Just look at it. If you have any doubts, we can always get connected on offline.
Okay. So how many of our customers would have paid now all the installments, if I ask you like that? Percentage.
No, so people who have at least one installment pending was something like 54. So the balance 46%, I would say. Percentage? 47%. I said 40. Broadly. Ashish, hello. They said about 46%.
Around 46% of the customers have paid all the installments. What are you trying to say? Sorry?
Correct.
Okay.
Yeah, that's
Yeah, thanks. That's it from my side. Thanks.
Thank you. Before we take the next question, a reminder to the participants, if you have a question, please press star then 1. The next question is from the line of Nitesh Jain from Investec Capital. Please go ahead.
Thanks for the opportunity, sir. You said that 42,000 customers have not paid single EMI. That data is till September or October?
September.
So what will be the number as of October?
We would need to revert back. Well, I replied on that to somebody else, saying that data is yet to come. Because we were all tied up with our boards yesterday.
Sure. That's it from my side, sir. Thank you.
Thank you.
Thank you. Well, ladies and gentlemen, that was the last question for today. I would now like to hand the conference back to the management for their closing comments. Mr. Bhavik Mehta, your line is also unmuted. You may please go ahead if you have any closing remarks.
Thank you all for participating to the call, and thank you to the management to taking the time out and making us understand the earnings that had gone by. Thank you, everyone.